What's up, guys? Welcome to the Financial Dad Podcast. I'm Gus Robertson.
This is JC.
And this is my daughter, JC. Today's episode is basically Insurance 101. I get a lot of questions every day in regards to how insurance plays into financial, like your financial well-being as a house. And so I'm going to break this down to something that's super easy to understand. And again, it's going to be a three-part series. In this 3 parts, the first part is going to be, I break things down into 3 categories. One of which is, what do you own? And so that could be, for example, the most basic form of what you own that everybody has to have insured is auto. So your auto insurance. Not going to spend a ton of time on it because it's pretty simple. And then homeowners, and then of course it keeps right on going. You can have insurance on what you own, so boat, 4-wheelers, rental property, all that kind of good stuff. The second
you can
part,
touch it, you can have insurance on it.
Yes, if you own it, you can insure it. And trust me, the insurance companies will take your money on every single one of them. The second one is on yourself. And I will go into detail on this one in regards to life and health. There's a lot of misleading information, as well as you should do this in regards to both of those. And then the third part is business. So the 3 categories, or the 3 main business insurance, are general liability, workers' comp, and commercial auto. But today we're going to focus in on the what do you own. Any questions? Okay,
Not yet.
cool. Okay.
Not yet.
So what I want to do is we're going to go into, who do you buy your insurance from? That's the number one thing. And so in the world of insurance, you have 2 choices. And so I am a broker. I am a non-captive agent broker.
Can you explain what captive means?
So, well, non-captive means that I have spent years bringing on companies. So if somebody calls this business and they want to quote on something, let's say basic like homeowners, I can provide people with quotes. Now, if anybody ever says, oh, I'm contracted with 20 companies, that doesn't mean that all 20 companies are great companies. There is a company for the need. For example, like with homeowners, an insurance company that's great on the coast may not be great for 100 miles in. A homeowner's policy on a house that was built in 1905 is not the same as what you would put on a home that's built in 2024. So there's differences. Not one company can be great at everything. And so that is non-captive, meaning I basically have 4 or 5 different companies that are best for each kind of property.
Okay.
So a captive company. So
I was just about to ask you to explain what that is.
Yeah, I mean, I'm pretty much put myself out there. So my career began with a captive company. Came straight out of college, worked with a captive company for 5 years.
And what's an example of a captive company?
Well, I'm going to say this. So I stopped working with that captive company because you were born. I really did. I basically stopped working with them because I wasn't going anywhere. It was very difficult at that time to build a solid book of business. Plus, I was young enough that I understood that I wasn't really building anything that I could sell.
Yeah.
Meaning like sell the book of business. But a captive company means that how I kind of like describe it to my clients is you walk in their front door or you give them a phone call and you say, I am buying a house. They're going to give you one quote.
Take it or leave it.
Take it or leave it. Walk out the door, take it or leave it. And so when you, and the only way to, if you don't like that quote, then the only way to reduce, or let's say you don't like the premium, that's 99% of the time, you don't like the premium. Then
you gotta go somewhere else.
Well, then you have to make the policy worse to make the premium better, meaning you have to increase the deductibles. You have to make changes.
So you're heightening your risk to spend less.
That's right. Okay. Because in your mind, you feel like that most captive companies, they are relationships. So we preach relationship here. That's a part of our culture with all employees is we talk about relationships. But with captive companies, I remember my first training that I had with them. I told you guys this yesterday, that it was a week-long training. It was 4 one-week-long trainings. And what they did is that they had you go and you wrote a list of 100 people that you knew. So imagine being 23, 24, and you're like, hey, write a list of 100 people that you know. Well, when you're 24, everybody that you know is like just either still in school, broke, don't have a home, and still living off of their parents' money or really struggling. Mm-hmm. And so my 24 people, I was the youngest person in my class by like probably at least 7 to 10 years. And so that was really difficult. So I learned very early that whether or not you are non-captive, an independent brokerage, or a captive, that building your book of business is totally based on relationships. Mm-hmm. They take it a step further and they really key in on your who you can touch, like your family, your friends, and things like that.
So they want you to do business with the people that you were closest with.
Yes, and the number one thing, the reason why I left them was for obvious reasons, but the second reason is
because of me.
Well, yeah, on a captive company has a lack of competitive quotes.
Okay.
Competitive companies. So, like going back to like a homeowners, we can quote with 10 different companies. Find the best one for you, because again, not all homeowners. You could have a home sitting here and a home 2 miles away, and it have two totally different needs. Mm-hmm. Built the same year, same everything.
And what's the best way to choose between using a captive company and a non-captive company?
Well, I always say there's only 2 reasons why people don't do business with us. Mm-hmm. They don't know about us,
or they don't like you,
or they don't like me, or they don't like us. There's only 2 reasons. Mm-hmm. So like in your town, so this is for everybody in basically anywhere. If you really want to have options, so I tell my clients, it's like pigeonholing. There's a lot of great captive agents, a lot of them. Who they represent is a captive company that can only give you, one or two options, not quotes, but options within that quote. So they have to take that one quote and then change it to make it worse for you to be competitive in the market. So how do they sell that? Well, they sell it based off of relationships.
So when people were trying to find these cheaper policies, and
it's not always about having a cheap policy.
Yeah, but when they're trying to get affordable insurance and someone lowers all of their stuff so that it's a worse policy so they can make more, do they always know that? Or do they just believe that person is saving them money?
So I'm going to clean up your question. So a lot of people do business with companies. So I preach relationships, mm-hmm. and I educate people. I try to spend, whether it's 30 seconds or 5 minutes with somebody, basically asking questions that I know will play out later.
Okay.
So as an example, I talk a lot in this area. So if I know that your home is over 15 years old, I go ahead and hit the things like roof. Mm-hmm. Like, how old is your roof? Does it need to be replaced? You're buying the house, and we'll talk about this later in this episode whenever it comes strictly to homeowners, is if you are buying something and you're spending a lot of money on it. Mm-hmm. So let's take you, okay, as an example. And we're getting ahead of ourselves, but it's fine. So I'll swing back around to this. But if you were buying something,
okay,
let's say you were buying a home, your first home. Mm-hmm. And I know that you really can't see this right now, but let's say you're going out and you're buying a $250,000 house. Okay. And, or let's go more reasonable. Let's say that you're buying your first townhouse, mm-hmm. and it's $200,000, and it's not brand new. You know that it's 10 plus years old. So, what are the questions that you are going to ask about that place? What do you want to know to make sure that home is worthy of purchase? So you have to have your own little checklist. So insurance by definition is basically just a contract between you and an insurance company that says, number one, like on homeowners, if your home has a claim, that it's going to pay to get it fixed. Or if you have an auto insurance claim,
Okay.
that the auto insurance company is going to be there in your defense.
So it's a fallback.
Well, it's a protection policy.
Okay.
It's like.
What's your nickname for it?
My nickname?
For insurance?
I don't know. What is it? Oh, protect your ass, aka protect your ass. And so the reason why I'm spending time on insurance today and we're talking about it is because insurance is the foundation product for all financial gains, all of it. If you go and you buy your home, you have insurance on it. If you go and you buy a car, you got to have insurance on it. Mm-hmm. In fact, the bank tells you how much insurance you have to have on it. It's like liability and then comprehensive and collision. If you buy rental property and if you finance it, the bank requires you to have at least enough insurance on it to protect how much money you borrowed. And so it keeps right on going. If you buy a boat, required. If you buy a four-wheeler and you finance it, required. If you go and it just keeps right on going. So insurance is a huge expense whenever it comes to the ownership of anything.
Okay.
And so you have to make, and my point behind spending time on this is that a lot of people get stuck on who they do business with. They think that the insurance company is their friend. And they are not. Insurance companies are not your friends. You guys are business partners. There is no emotion in insurance because it tells you in the policy what is covered. It tells you if they're going to pay it. It tells you exactly verbatim in your 100-page document what exactly is covered and not covered.
They're always so long.
Yes. And I believe that if people really understood, going back to the captive and the non-captive, I think that doing business with somebody that you have a great relationship with and that you're trying to support their business is great. Mm-hmm. But you can't do that to the detriment of your financial well-being.
Meaning you can't help people out more.
Well, no, okay. So you go and you work with a captive company.
Okay.
And so we'll just call that company XYZ.
Okay.
XYZ company. Should I take all of my insurance? Let's say I didn't own anything insurance company wise. Should I take all of my insurance and put it with you because you're my daughter and possibly pay 20% more or 30% more than what I'm paying now?
No, I wouldn't want you to do that.
Well, and that's good.
That would make
because
no
I
sense.
Wouldn't. And I think the cool thing about it is I have
you're not
never.
Going to support me?
All right, yeah, all right. I'd rather
I'm kidding.
give you the money. But I think that I have never approached my family about bringing, even though this is my 24th year, it's hard for me. 24 years now, I have been in the insurance with 13 of those now
crazy.
Being,
That's crazy.
Yeah, 13 of which have been in ownership of a property and casualty.
I thought it was 19. I thought your business is as old as me.
Well, I was with somebody else before that, captive.
Okay.
So, but going back to the basics, the financial part of your financial, I don't really call it like, you hear a lot online about millions, being a billionaire. It's so ridiculous. It's just so ridiculous.
It's unrealistic.
No, well, it's not that it's not realistic. It's that if you don't have your foundation and your baseline under control, how can you be up here when you don't control this?
Yeah. Well, because people see it and they want to go from 0 to 10.
Well, people believe anything that they see on social media.
Yeah. I'm not saying it's not possible to be a millionaire and make that much money, but you have to do the small things to get there.
Okay, so let me ask you this. Easy peasy. If you took singing lessons and everything, can you be Taylor Swift in like a couple years?
No, I'd make someone go deaf.
Well, I just don't. I think there's a lot of unreasonable, bad advice telling people that they can be and do anything that they want to do without the time that it takes.
Well, and
You know,
then their expectations of themselves are higher than reality.
well, it's unrealistic.
Yeah.
It's unrealistic. You know, like Kyle was saying a while ago, and I understand this completely.
10 years.
Yeah, it takes patience. It does.
Just about everything ever, 10 years is how long it takes.
Yes. And because, you know, I heard this whenever we went to Andy Elliott, is how can you learn to do anything if you're not learning anything from somebody else? That means you're having to like basically invent the wheel, a square wheel, even though other people have invented circle wheels. You invent this square wheel and then you ride around on it for 3 years. That is like that's
So
the
you're kind of like a
definition.
sitting duck at that point.
Huh?
You're like a sitting duck.
Well, you're wasting time. I don't feel like I've wasted time. I don't give myself a lot of grace in regards to the experiences that I've had in creating this business. It was super difficult, and we're getting off subject again. But it was super difficult. But I am here now,
Yeah.
and it took this time frame to get here. But I would say that going back to the insurance, if you don't know what you were on the hook for, I think a lot of mistakes are made because people, they want something so bad that they don't know what they are financially on the hook for if there was a claim which could destroy the financial, the steps that you have taken to be financially free. So going back to this, I will simply say that insurance, again, by definition, is just a contract with you and an insurance institution that says if something bad happens, we're going to be there for you.
Okay.
And you pay a premium for that. So whether or not it's homeowners or auto or boat or or life or business, and a lot of times it is required. And so the thing that I always have a hard time with is people don't understand. Again, the only reason why people do not do business with Capco is because they don't know about us or they don't like us. They didn't like what I said. And so even though I will say everything I say is straight facts. And I've gotten used to that. It's just facts. So, and let me explain the reason whenever I say the only reason why people don't do business with us is because they don't know about us. So that's number one. And whenever you say, because that takes marketing as well as reach out and touch your current clients and saying, hey, you know, and asking for business. You have to be proud. In our business, you have to be proud about what you do. And for a long time, you're hustling, you're grinding, you're going out to speaking engagements, you're meeting with mortgage brokers, you're meeting with other lenders, you're meeting with realtors.
Just doing everything you can.
You're doing everything that you can to build your book of business, and then magically 10, 12, 13 years goes by and you're like, boom, you're sitting there with a $3, $4, $5, $10 million book of business, and you realize that maybe you're not exactly. So the goal for my company is 100 million. That's where I want to be, and it's going to happen in my lifetime. And so 100 million is where I want to be, because I have spent so much time and effort on cultivating solid relationships in my business by being truthful with people. And a lot of people don't like the truth because of what other companies
have told them. And a lot of times what you'll find is that those people aren't even with. So here's the thing. I own my company. The only way that it can be taken away from me is if I die. I mean, that's it. Yeah.
So I have to stand behind. I tell all of my clients, I don't need your business. I want your business, and I want it so bad that I want to tell you the truth. Every single time.
They're always so shocked.
Yeah, they're
So like,
they are. They're like, oh, well,
What?
I wasn't. It's crazy. I mean, I can have a conference call with 5 different clients, and all of them say, well, I wasn't expecting that. And so, and when you start talking with people about that, they're always weird about, they don't even ask about the premiums.
What are you telling the truth about?
Whenever I say the truth, what I'm talking about is claims. So, for example, in today's episode again is what you own. So let's talk specifically about homeowners.
Okay.
So I'm getting off subject, but is that okay?
Tie it in. So
Okay.
you're going into homeowners. Let's say somebody comes to you for homeowners insurance. I'm going to tell them the truth about homeowners insurance.
Okay, cool.
That works with what you're thinking.
Okay, so whenever I say that I talk about facts with people. So let's talk about homeowners.
Okay.
So homeowners, so we live about an hour and a half from the coast.
Okay.
So we're considered somewhat coastal. If a hurricane rolls through eastern United States, it's going to come through, it's going to have an effect on us. As well as we live in an area where we have a ton of like older homes, like going 1900s.
Way too many.
You know, and these homes are being renovated, but they're still 1900s, 1950s, 60s, 70s homes. Well, what's happening is, for example, on homeowners, people are being told that when you become the homeowner, that whatever happened in the past doesn't matter.
Like past with their claims from previous houses or past as far as a house?
So I'll give you a good example. So today, this literally came in about an hour ago. This guy bought a home that was built in 75.
Okay.
When he bought the home, he did not do his due diligence. He got an inspection.
Okay.
What a lot of people don't know about inspections is that they are what you can see.
Okay.
So when you buy a home, a lot of people don't understand this. Number one, an appraisal is only good for one day. An inspection is only good for one day.
And what is an appraisal?
Well, an appraisal is just the value of your home based off of the market,
Okay.
which can fluctuate up and down based off of supply and demand, but really demand. And then an inspection is, so there is a professional inspector. He goes out and he inspects a home, but it's a visual inspection. So he will say that they don't get on the roof anymore.
So they're not actually sitting there testing like your AC or your heat,
I'm not going to say
roof.
that 100% of the time that they don't look, but they do. They look for like wear and tear, like usage. They do a visual inspection from the ground on the roof. So that's the main thing I
How
want to
does that
hit on
even
to.
work?
Well, but
You can't even see up there if you're standing
so
on the
let's look
ground.
at it. Let's look at that example. You find the perfect house that you want. Perfect. It's everything that you've seen in your you visualized it. You want that house. The lender approves you for financing.
Okay.
The realtor has shown you the house, and of course she wants to make the sale. You guys agree to use an inspector. You pay for it, right?
Okay.
The inspector does the inspection. Yeah, today the roof looked good. Okay, well there was a leaky faucet. Okay, well cool, the seller fixes that. Very minimal dollars, probably just tighten something. You buy the house.
Okay.
You didn't ask enough questions. On the residential property disclosure, which is provided to the buyer from the seller, it's just a 3 or 4 page document that basically lists out the things that they know about the house. And there is a place on the residential property disclosure where a person can answer. They can answer yes or no, as well as there are spaces for them to fill out. For example, let's go straight to the roof. On there it says, has the roof been replaced, or do you know when the roof was replaced? And so in the seller, but then there's also a block that says no representation.
Okay.
Which means they don't know. Now, if you were a homeowner that's owned a home for 10 years and the house is 50 years old, you didn't replace the roof, what are you going to put? No rep. Because you don't know.
What are the questions when people are going through this process that they don't think about that are actually important?
That's a great question. And we will have
Can you write that down?
yeah. What we'll do is we will hit that on another episode.
Okay.
And that's a great question whenever it comes to home ownership and what you should do before you buy a property in relation to insurance.
Okay.
And so, but I would simply say that people, to give you a brief answer, people don't do enough due diligence in regards to purchasing a home because they want it so bad.
They just want to get it over with.
that it's like a relationship that you want to work so bad that
And
you're
the other
willing to
person doesn't.
overlook everything.
Yeah.
That's exactly what it is. And
That's how you always get yourself screwed.
Yep. So for an example, in regards to buyers wanting a house so bad that they're overlooking stuff. So a phone call came in today, and we get these probably at least 10 times a month. Client calls in and says, hey, how do I get the clue report from the insurance policy? A clue report is just a claims report
Okay.
from a previous homeowner's insurance policy.
Okay.
It's impossible.
Can a previous homeowner's insurance claims affect the person buying the house now?
Yes, because so whenever a claim happens with a home, and let's say I own a home
Okay.
and I have a roof claim, as long as the home was fixed back by the claim, then I don't even have to mention anything
Okay.
at sale. And so another thing too is what if I paid out of pocket? I don't have to say anything. And so that's why inspections are so important whenever it comes to, and again, we'll hit this on another episode, but that's why whenever you buy anything, insurance is not used to maintain property. This is a huge misconception where I do, this is why what I do is different. I'm protecting the future of the company, my company. The reason being is because if I tell people that no matter what, this is what's happening in the insurance industry. This is why what we're about to talk about is why you're seeing a ton of information right now, especially on the news, about insurance rates going up. Well, there are companies out there that are telling people that, oh yeah, that claim's going to be paid no matter what. And if it doesn't make sense, then you should ask more questions. So my example is this.
But what if someone doesn't even know that it doesn't make sense? Because they don't know between right and wrong.
Then watch this episode. So the answer to the question is this. Before you buy anything, it is the insurance as well as buying anything is a buyer beware product. Buyer beware means nobody owes you anything to tell you the truth. Do you understand? Nobody owes you anything to tell you anything about what you're buying. If it works that day, then that's it. If you go buy a car and it's 10 years old, if it works that day, is it?
Well, they're going to tell you what they want you to hear. That way they can make a sale.
Or they tell you nothing.
That is what.
Or they tell you, hey, today it works great. And so,
or you might be on the side of the road.
Yeah, exactly. But that's what you bought. You bought a buyer beware product.
Okay.
And so insurance is a buyer beware product. So meaning that I can tell you whatever you want to hear, but we don't do that because I own my company. I tell all of my clients, especially my local ones, but I tell everybody from coast to coast, I do not want somebody calling my office and saying, you didn't tell me this, and now there's a problem. I tell everybody, it's almost script-like the way that I talk to my clients is, unfortunately, if I lose a piece of business, it's not going to be because I didn't tell them. More than likely, it's going to be because I told them, and the next person that they went to did not tell them, and they bought totally based off of premium instead of quality and premium. And so that happens a lot. It happens. It happens
Way
a lot.
too often.
Yeah. So this is probably 4 or 5 months ago. There was a realtor that had a large home for sale. It was a huge deal. It was probably a $1 million deal.
Really?
And so, well, in this area, that's pretty large. And so, $1 million deal. And so, she had a relationship with an insurance company here in town. Meaning, a relationship means that she just knows somebody.
Okay.
And so,
Is this someone that she went to often for business?
Yes.
Okay.
She did. Yeah, the realtor. And so, and a lot of realtors have those relationships. We have those relationships. And so, but the home was right at 25 years old. The quote was given to the client. The client and the insurance agent spoke, and the client specifically asked a question about the roof. Says, hey, this roof is 25 years old. On the inspection, it shows that it needs to be replaced.
Mm-hmm.
And the insurance agent specifically said, well, once we sign the dotted line and we take over the insurance policy, well, no matter what, the roof is going to be covered.
Okay.
Those exact words. The roof will be covered. Now we're talking about a 25-year
So they were
roof.
told that it's going to be fixed.
Well, no, language. They said that it was going to be covered.
Okay.
So it was up, and the previous owner, I think that they had passed away. And
But see, me, if someone told me it's going to be covered, I would automatically assume it will be covered to be fixed.
to be replaced.
Yes.
But there has to be a claim in order to be replaced. Insurance companies do not maintain properties.
They don't just go out
Meaning
there and
that-
start, you need to fix this, you need
That's
to
right.
fix this.
So what happened, fast forward, is the client talked to me. I was like, dude, you have a 25-year roof. I mean, a 25-year-old roof. This is Eastern North Carolina.
Mm-hmm.
And so we go through seasons, we go through 8 seasons a year, up and down, weather's up and down. So
Seasons.
yeah, so 30-year roofs don't last 30 years. You're
Why do you
maxed
say
out
it
at
like that?
22, 24, huh?
Roofs.
Roofs. So roofs don't last 30 years. And so I told the client exactly the truth. I was like, listen, if the inspection says that the roof needs to be replaced, you're going to have to replace it because, and this is my specific language, you're buying a new home and you had an inspection.
Okay.
In the first 30, and let's say I write the policy, in the first 30 days, the insurance company is going to go and do an inspection on the home, and they are going to go on the roof. No insurance company is going to insure a $1 million home for $2,000 a year and not do their due diligence on the home.
Mm-hmm.
The difference is I tell people this up front. A lot of companies are telling people this. They're writing the policy, and then in the first 30 days, they're also doing an inspection. And they go out there and say, oh, well, the roof is older than what we thought. It's not in good. We can't cover this roof. So we're going to have to increase your premium or change the type of coverage that is on the roof. But now they're locked in. They've
And
already.
how can changing the coverage on the roof affect the policy or the homeowner?
Well, because now, now the insurance company that they thought was going to, that they were given misleading information about the coverages that they went to because the premium was lower than mine, that now that the roof is going to be covered no matter what. And it's not, because every company is going to do their due diligence. And so now their premium went up to maybe double mine. But now they feel stuck because they're already with them. And now the emotional part is now that agent reaches back out to them and says, hey, I've heard this so many times. Hey, the roof is not what we thought it was, blah, 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 and a bunch of excuses. And so financially, that ends up hurting the client because now they have to pay more insurance. Now the insurance company goes to them and says, hey, you need to replace your roof and have to pay out of pocket. We good? Okay. So that is what we don't do. Because we have so much business coming in from lenders. Mm-hmm. We don't take a lot of business off the street.
No.
And it's not that we wouldn't, it's just that the majority of the time, especially, for example, going back to auto insurance, most people are, no matter their education level, are uneducated in regards to auto. They don't understand the liability limits. They don't understand what they're on the hook for if they have a claim. And then the same thing for homeowners. They don't understand what replacement cost is. They don't understand what actual cash value is. They don't understand deductibles. They don't understand that a home, I tell all of my clients this, paying a house payment is easy. Mm-hmm. It's the easiest thing that you will do in home ownership. It's the maintaining of a home that is the most that cost you a lot of money. And so,
So it's best to educate yourself on what those things mean so you can have the right
well,
policy.
it's better to, if you don't know the questions to ask, then you should be doing business with somebody that poses those questions, no matter if they write the business or not. And so that's how I educate all. I don't care. I mean, I want to do good business. I want to do business that stays on the books. I want to do business with companies that pay claims that should be paid. But the companies, insurance companies, the reason, and we'll go into why rates are going up, but insurance companies are not in the business of, if you go and you buy a 25-year-old house where the roof, nobody knows how old the roof is, and then we have a hailstorm, and then you have a roofer that comes by and says, oh, I was at your buddy's house or a friend down the road and we replaced their roof. Do you mind if we look at your roof? And so they go on the roof and they find a bunch of damage. Well, when did that damage occur? Nobody knows, because the inspection was only ground up with a monocular, so they can't see anything.
I really want to know how they do that.
They don't. They do the best that they can that is required. I assume that somebody in the
Why
past
is it
fell
not
off.
required? Okay.
Because I assume that somebody fell off the roof, because a roof is a big deal, and the way that the way that is looked at is that you as the buyer should be doing your due diligence and making sure that this huge financial decision that you're making is of good quality. You shouldn't rely on an insurance company to make your home a quality home. Insurance companies should pay the claims that are legit, unexpected claims. Well, if you're buying a home...
What would be an expected claim?
You know, I have a hot water heater bust.
Okay.
It does damage to if it's upstairs, second story, then it does damage to ceilings. You have a fire in the kitchen. Bathtub overflows. Most of the damage that's done to house is either from the roof or something to do with water. The majority of claims. You know, in this area of where we live, hurricanes do a ton of damage. You know, things like that, wind.
Okay.
And so, but imagine we are in a high prone area to wind claims. Imagine having a roof that has not been maintenance, not been maintained, not been replaced, and no roofer has looked at it, and you are waiting around for a claim to fix your roof because you did not do your due diligence from the beginning. That happens a lot. And I think that the education-wise, whenever it comes to the purchasing of a policy, and again, I'm not saying that all captive companies are bad. There's a lot of great captive companies. But the two reasons why I am not pro-captive is I am vested in my business doing well. They are vested in their business doing well as long as they work for that company.
Okay.
And if that steps on people's toes, that's fine. But that's the truth.
So they're okay with, I'm not going to say they're as in putting everyone in that category.
Sure.
But some are okay with writing bad policies or doing things that go around other people for that business.
Well, I'll say this, and this is the truth. If you are awarded, if you get rewards for throwing, have you heard the term like just like throwing shit on the wall and hope that it sticks?
Yeah.
So if you get a reward or award, if you get an award and rewarded for how much business you throw on the wall, not knowing if it's going to stick, that's what captive companies do.
So they're just writing, just hoping that it stays.
Half of it sticks. Whereas with us, we don't do that because, now of course, does it happen? Yes, it happens to all companies. But I believe that if you spent an extra, like all of us, like I coach you guys, if you spend an extra 2 or 3 minutes with the client and you ask them questions, then that will either, the client will appreciate what you said or they won't. And that's the truth of the matter. So, and of course I am pro independent agent brokerage. The reason being is because they can give you choices. And and that's just what I believe. I believe that as human beings, if somebody takes away your choices and says, hey, you're going to drink this milk the rest of your life. This is it. This is all that you're going to drink, good or bad. If you don't like this,
sick of it.
If this milk costs you too much, hey, give me half of it back. And then you take the other half. But you got to, this is it. That is what I am not pro. I believe that a person should have choices. And if you give a person choices, like what we do, and as I'm sure a lot of independent agencies and brokers do, then you establish a relationship with the client that if they...
All of these independent brokers are going to be loving you after this.
Well, and they should. Yeah. Our address for our referral fee is... But I think that
please just send it to da-da-da-da-da.
Yeah. If you give people choices, then I believe that you're going back to the two reasons why people stay with you, which our job as independent brokers is retention. If I lose a client because I didn't spend enough time with them,
then you have to get two to
it costs me
back.
two. I got to replace them and then write again, and so that's the name of the game is retention. And how do you retain? Well, you educate people, even if again we're not talking about a ton of time, mm-hmm. But I think that's like super important. But we will go over on a different episode. We will go over inspections and like how when you're buying a home, what do you look out for in regards to insurance, and what are the majority of the claims and inspections. But I wanted to hit on another topic today because I do get this question quite a lot, and we field these questions about insurance rates going up. So it's my belief that the reason why insurance rates are going up is number one is the rise in labor and material cost.
Which is something that no one can stop.
Well, inflation, hyperinflation, the last 5 or 6 years of just, so it's like this, and I don't really get into politics, but a lot of money that flows into the United States goes out to support other countries. And so if you really think about that... I'm not going to
ask a question based off this because we're going to get put in a bad situation.
Well, but whenever it comes to the cost of materials and labor here, if more is coming out, then how... That is the definition of inflation, that things cost more. Mm-hmm. And so if things cost more, this $300,000 house that husband and wife bought, 10 years ago for $300,000.
It's now worth like $350,000.
Yeah, if you just compound that by just 4% inflation year after year after year, well now it's 10 years later, and what is the replacement cost of that home? And so, and that's easily, you can go to an inflation calculator and find out what would it take to rebuild your home in today's money and materials. And so I think that is one reason why insurance rates are going up, is because homes are not properly insured. And so companies are fourth placing insurance on homes. And so fourth placing means, again, if you bought a home 10 years ago for $200,000 and it costs $400,000 to replace it in today's money and materials, do you want it to be for $200,000? Do you want $200,000 worth of insurance or $400,000? Do you want to rebuild it if it burns down?
Is it a bad thing to accept the fourth placement of insurance whenever you're buying from the bank?
Well, if you're with that same company, then okay. So let's say that you bought a home 10 years ago for $200,000.
Okay.
And you've been with that company for 10 years.
Okay.
Just because that company had a price increase, as well as fourth placed your insurance to go to $400,000, and if you were paying $1,000, now your insurance rates went to $2,000 because mm-hmm. you doubled the insurance. Mm-hmm. That doesn't mean that every company's cost of insurance is the same.
Yeah.
That's not a thing.
No.
This is why independent brokers are, in my opinion, the best, because they can give you options. If you have a policy that went up in premium, okay, well, cool, we'll just move it to a different company. And whereas captive companies cannot do that. Mm-hmm. And so that's one reason why I think that insurance rates are going up. Number two is people are not maintaining their homes and they are purchasing homes that they cannot afford to maintenance. That happens a lot. And we just hit on that. And so if you go and so when interest rates were low, people were buying they were buying based off of what they could maximally afford. And so if
you buy when the interest rates are low, can it affect you when they rise?
No.
Okay.
No.
Depends on your interest rate. If you have an adjustable,
yes.
it could.
Yeah.
What's
so
an adjustable?
A dump interest rate.
Yeah. So an adjustable rate puts you in a lower interest rate up front, but then it ratchets up. It could, let's say you have a 30-year mortgage, but a 5-year ARM. So an adjustable rate mortgage ARM.
Okay.
And so at the end of 5 years, it can go up from, let's say you started at 3%. You can go from 3%, and let's say it has a maximum where it can go up a half a point a year. You can go to a 3.5, then a 4, 4.5. And imagine being a person who, husband and wife, 25, 30 years old, no kids, adjustable rate mortgage. 5 years later, they have kids, more expense. They've got a dog. They've got an older home that needs to be, they've got pets. They've got an older home that needs to be maintenance. And now your mortgage payment goes up $100 a month. That's devastating to a lot of people. But going back to people are buying homes because, again, I'll keep saying this, paying a mortgage payment is easy because you would not have bought the home at the very beginning if you could not afford that mortgage payment on that day, right? So meaning that principal, interest, taxes, and insurance were figured that day based off of your finances. You could afford that home that day. You wanted it bad.
So it's focusing on that one instant rather than the future and how that could affect.
Well, you're not looking at, so people are buying homes off of the interest rate. So like right now when interest rates are higher, right? People have been pushed back down to maybe they cannot afford that $300,000 house. So now it's the opposite of what it was 3 or 4 years ago. So now they're buying a lot, again, it's based off of fear because they're like, oh, we need a house so bad that we're going and we're buying the home. And they're maxing out DTI, debt to income, which is normally about 48% of gross income. That's a whole nother episode. But when you spend every single allotted amount on the purchase of a home, where does the money come from to maintain the home? So this is why I'm spending so much time on the insurance part of it, because the insurance plays into the finances, plays into the financial. And so
it's not normally assumed that those are connected.
No, it's all connected. So if there are 3 parts to finances for the average family, it would be your staple expenses, so like insurance, your insurance payment or staple expenses, and then your non-staple expenses, which means that it's your choice whether or not you spend that money.
Okay.
The staple expenses are what's killing people. Your staple expenses are where people are, and then the maintaining of those staple expenses.
Because the cost to maintain those goes up as well.
Yeah, because they're getting older. For example, you go buy a brand new home. Okay. And
how much? $250.
In today's world, $200,000 for you. At let's say at 19 years old, you went and you bought a home. I would say that you could probably afford a $200,000 house. Okay. So with roommates. Crazy. Yeah.
With roommates.
With roommates and dad help and mom help. I don't want to, all of that kind of stuff. And it's brand new. Within 5 years, you're having to maintain. So you have to, and the financial part of what we're talking about, again, we're getting off base, but the financial part of it is that who's going to cut the grass? Who is going to, who's going to clean it? Who's going to, all of the things that you really don't want to do, who's replace the filters, HVAC servicing, the hot water heater. Who is going to do all of this stuff that nobody talks to you about whenever it comes to home ownership? As well as, what type of loan did you get? What happens if you lose your job? What happens if you have an unexpected
But
event?
if people thought about that, I'm not saying that it doesn't help to think about that stuff, because that's where it comes in, preparing, saving, but that's a whole other thing. I already forgot my question.
Well, I think going back to the
It'll come
insurance,
back.
because again, I'm trying my best to stay on this line.
Get it together.
The rise. So going back, the reason why insurance rates are going up, number one, and this is just my opinion, it is a rise in labor and material cost. And number two is people are not, they're so maxed out on the home that they bought that they cannot afford to maintain it. And so whenever an event happens, like, people are not, the main thing that I see is people are not maintaining their roof. So when you don't maintain your roof, if you're waiting for an insurance claim to replace or maintain your roof, that's a bad call.
So what are the main things you need to do to maintain your roof?
Again, off topic.
Okay.
Okay, we got to stay on number two.
Okay.
Okay, so that is more of we can talk about that like on a purchase.
Okay.
So we're talking about why the insurance rates in North Carolina are going up. Okay, so again, rising labor and material costs. Number two, people are not maintaining their homes, so they're waiting for a claim, like a hurricane. They're waiting for a hurricane to come through to then possibly do damage to their home, or there's a new event kind of going on right now where these roofers, they don't really have an example of a name of a roofer, and I wouldn't drop a name anyway, but this is happening a lot.
Don't start name dropping.
Yeah.
Don't start name dropping.
These roofers, they'll knock on your door, and most of the time they're not local. And a little side note, if you did not call the roofer to come do an inspection on your house, you really have to question why they're there. And so what's happening is they're knocking on your door, they're saying, yeah, well, we just replaced the roof down the road. We're doing free inspections, which is not a bad thing. They go on the roof and all of a sudden they find all of this damage that you should have known about before that. Mm-hmm. So if we have a bad hailstorm 6 months ago and you know that hail came in your area, should you not have called a roofer?
Checked out.
I just don't think that people want to know. They're waiting for damage to file a claim to take the place of them maintaining their home. So I think that, and so what's happened is that
can't that also prevent companies from being able to pay out claims on time?
Explain.
Or because I know sometimes whenever there's like an influx of claims, so we have a hurricane, right? Yeah. A bunch of houses, their roofs get messed up, they have to get paid out. And they have to file a claim so that it can get paid out so they can fix it. Doesn't that prevent them not maintaining it, prevents other claims that should actually get paid out from being paid out?
Well, no, no, that's not the thing.
Okay.
So the third is policies are being sold incorrectly. And so what I mean by that is the same thing I said about some insurance companies are telling people that no matter what, okay, you're the new homeowner, this policy starts on June the 10th, you're closing on that house that day. Yeah, man, no matter what, you know, and specific questions are being asked by the homeowner. Hey, we're not sure how old the roof is. Oh, that's not a problem. If there's a claim, yeah, we'll pay the claim. And so, which is not the truth, because again, within 30 days, an inspection will be done by the insurance company. And if that roof is not of good sound quality on that day, then the type of policy could change.
Sometimes they'll even cancel it.
Yeah, because of misrepresentation. And so, but those are the three reasons why I think that insurance rates are going up. But I will tell everybody this, and I get this question a lot. If the value of your home went up, and so you bought a home again 10 years ago for $300,000, and it costs, it's easy multiplication. You can see what the homes are selling for around your house. And so if you see what the homes are selling for, then more than likely that's within reason what your home should be insured for, especially in this environment where there's such low supply. supply of homes. And so people are paying premium dollar for homes, but is it really premium dollar? Is it really premium dollar, or is that where we should be after the inflation has caught up? Because home prices, the only way that home prices are going down is if there is enough homes for people to buy. And right now there's not. There's not enough homes. So of course that makes us simple economic supply and demand. If there's low supply, price goes up. And so that's the number one reason why I believe that insurance rates will go up and continue to go up. Plus, depending upon where you live, we are considered somewhat coastal. So we have a higher chance of claims here if there were a hurricane. So, hey guys, just want to go over a few financial tips for today in regards to just kind of hitting some highlights about what we went over. And so on simple auto insurance, everybody's got to have, if you got a tag on your car, you have to have auto insurance. Look for a competitive price. And so, and actually ask questions in regards to specifically, what are you on the hook for if you have a claim? And what I mean by that is, if you get into an accident and it's your fault, what are you on the hook for? If you get into an accident with somebody that does not have insurance, how does that affect you? Or if they don't have enough insurance to fix your body as well as your vehicle. The quality of product is equal to the premium. So just make sure that you're with a solid company and you ask questions. And then at least if you make a decision to go with like lower liability limits, then you did it because you made the decision, not because somebody forced that decision on you because you said, oh, I want the cheapest policy I can buy, which does happen. That does happen. On homeowners insurance, my tip is, remember, it's not the insurance job to maintain your home. Purchase a home that you can financially maintain. This should be included in your home budget. And then just simply, number 3, ask more questions. Don't be so ready to buy something.
Take your time.
Yes, take your time and ask the questions. I realize, and just like my example earlier, was some people want something so bad. I remember in 2017, whenever we bought our home that we live in now, is we needed a home so bad that we had been looking for 6 months, and we had, at that time, there was five of us. We needed a home so bad, I think I would have
now there's 7. That's
pretty much
crazy.
done anything to get that house. And I believe that we did do anything. And we were lucky. The home that we bought was great, but I imagine how I felt being in the position where I didn't have a choice. School was starting, we wanted to be in that school zone and go to that school, and I was under the gun. I think a lot of people feel so much pressure to buy that they're making, I'm not going to say bad decisions, but they're not asking enough questions to make sure that they're in the know about what they are buying. And I think that gives you, the whole goal of this whole Financial Dad podcast is to get people to freedom and peace. There is no peace in not knowing where you stand. If you don't know where you stand with your finances, that is a bad spot to be in.
You will be running around like a chicken with your head cut off.
Yes, and it's a bad spot to be in. And as a dad, I'm telling you, it kills you inside to not know where you stand financially. Hey guys, thank you for tuning in today. And again, the whole reason why we do this podcast is to keep people in the know and give you a path to freedom and peace. And not everybody's goal in life is to be a multi-millionaire. Some people just want freedom and peace. But in order to have freedom and peace, I believe that you need to be in the know of what you have. Remember, pretty much everything is a buyer beware product, so just ask questions. And but if you have any questions, you could email us at financialdadpodcast@gmail.com. You can also leave a comment. And thank you guys for being with JC and I today.
And make sure you tune in to our next 2 episodes to this series.
Next episode, we're going to talk about life insurance. And then the next episode, we're going to go briefly into business and commercial insurance. So tune in.